Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, June 2nd, 2009. Well, we're seeing a very muted day on Wall Street, folks. It's been kind of all over the place, up, down, but in a very, very tight range. The range I want to talk about today, first of all, before we get into more of the technical side, is just this range between 94.50 to 94.40, right in that 10-cent range, and upwards of about 95.25, 95.30. Now you can see very clearly here, folks, what happened today. Ever since yesterday, remember yesterday we had that big move up initially, and then we kind of traded sideways into the close for the rest of the day, ever since 10:30, 11 o'clock right here. That range from this break right here of 94.40 to 94.50 and the high of about 95.25, that's been the range we've been stuck in all day today. It's just been continual, and you could tell because the moving averages on the 50 moving average and the 20 right here, see the yellow little line right here sloping down, and the pink line right here, the purplish line right here, they've now become one. And that's telling you that this market has been in a very tight range for a long period of time. In fact, going back to yesterday, right around 10:30. And what this is really telling us, folks, is that you're stuck in a range, and the only way you're going to break out, you have to break one way or the other. You're either going to have to break above this 95.25 level, which again mirrors basically a double top from yesterday's high right here, or the lows here of the day stretching all the way back to this pivot point and breakout right here above that line at 94.40 to 94.50. As you can see, you hit it right here. You kind of hit it right here, but I think this was a fake print. Then you also hit it right here into the close and bounced off. Every time they've hit it, you've bounced right back into the channel. It's not letting it break it. In fact, today is a great opportunity to show that again because you actually gapped lower today and sold off all the way down here where we were below 94.50. But at the same time, we rallied all the way back on an intraday basis into this channel. So that means once you don't get a close outside, once you get a close back in, we called in the chat room, we said as well, I said once if you get a close back above this 94.40, 94.50 level, you probably go test the highs of the day. That's exactly what happened. Went right up here to a double top. You can see how that little wick, it actually went higher with the tail, but really double topped right there. At that point, it was a beautiful selling or shorting opportunity. Market sells, consolidates inside bars, sells more. Bearish flag pattern on the 20, breaks down. Where does it go? Right to that 94.40, 94.50 level again. Bear flag again here inside bars. Notice the inside bars, 1, 2, 3, 4 green inside bars inside this red. That's a bearish pattern again. But sure enough, when the breakdown comes, you only go right back to 94.40, 94.50, and then you bounce right up, and you're starting to bounce back in right into resistance right here where the 20 and the 50 moving average are. This is again showing us, folks, there's an extremely tight range in this market, basically between 94.50 and 95.25. 75-cent range on the spiders, which compared to what we're seeing, the movement we've been seeing the last week, 2 weeks, 2 months, 2.5, 3 months even, that's a very tight range on these spiders that we're staying in. And you can tell exactly by the 50 moving average and the 20 being at equal. When they're equal, you know it's got to be in the same range for a long time. As you can see here, the 50 sloped all the way up and now has met the 20 sliding across. Now, we had some economic news this morning at 10 o'clock. Nothing major, but yet some home sales type data coming out, which actually showed a pretty good number for the market. That's initially why you got this spike up right at 10 o'clock, but it was very short-lived. Really, the market continues to be controlled by the dollar. I've stressed that in the previous videos, for both free and to the Research Center subscribers. You can take a look at the dollar again, and the dollar is continuing to get hammered. I mean, it's just that's the bottom line, folks. The dollar has been collapsing. I can show you the daily chart of the dollar here. Look at this drop on the dollar just in the last kind of month or so, month or 2 months. You know, all the way going back to basically mid-April, this collapse here on the dollar has without a doubt given the market a major bid, and many people would say, well, why is that the case? Well, it's all commodity related. Remember, this rally we've seen has been in what's called a reinflation rally. Reinflation rally basically says that when the dollar drops, it can cause everything to kind of get a bid that's traded in dollars, like gold, like oil, like coal, like copper, like steel. And all those stocks make up large positions in the market. There's a huge amount of them in the S&P, just in general, U.S. Steel, AK Steel, Patriot Coal, Cleveland Cliffs. I mean, I could go on, and I'm just naming some of the smaller ones even, but there's some huge ones. You know, there's some big type players out there, and it's no doubt that when the dollar declines, all those commodities are going up, and what happens to the stocks? If the commodities are going up, obviously we should know that the stocks are going to go up as well because they're able to make more money based off of that. Okay, so you can see stocks like let's take a look at AKS, up 40 cents today. It was up higher earlier. We've seen a little bit of collapse, but look at this constant move up. Look at U.S. Steel. All right, constant move up ever since basically $16, $17, now trading at $36, $37. Countless stocks out there. Even Exxon's getting a bid today, up 85 cents today. And when Exxon goes up, there's a good probability that you're going to see a weaker dollar because of that. And obviously, the weaker dollar helping Exxon get a bid. Oil today, kind of a mixed bag on oil. It's actually positive on the USO by about 16 cents, and it's been trailing up. Why has it been moving up right now? Why did it move down before? Just look at the UUP. UUP is the dollar index. Let's go to that. So remember this pattern. It's like a V. All right, let's see if that is mirrored by the opposite. And what's this? Upside down V. So that tells you exactly how oil is moving. And when the dollar moves lower, or the UUP, which is our dollar index we're following here, you are seeing a direct relationship, 100% relationship to the movement in oil. When oil goes up, commodity stocks like ExxonMobil, like U.S. Steel, like all these companies, we're going to get a bid that's going to keep the market floating. So really the big thing you're watching now for this market is the movement of the dollar. Now the dollar is at a little bit of support right here, right around 23.50. There is support, but I'm going to go back to the intraday here. What you can see, the interesting thing about it is you're slowly seeing the dollar weakening as having more and more of an impact to the negative side on the markets. Now, what do I mean by that? Well, if you go back a week and the dollar was down this much a week ago, the markets would have been up 100 points. Now, what they're doing right now is basically on the flat line. They're not moving. So that's telling you that there's some factors here that are not taking as big a brunt of the drop in the dollar as a positive, and that could be a little weakening of this whole situation. We may be on the verge of seeing a little bit of a commodity dip in the not too distant future, based off maybe a strengthening dollar or a bounce in the dollar could help to coordinate maybe a little bit of a pullback in this market. But right now you have to respect it. Right now the dollar every day is getting crushed every day virtually. I just showed you that daily chart of the dollar, the UUP, which was getting smoked for the last month and a half. Now right now, if you're looking at the indexes, folks, you got the Dow is trading up 6 points, Nasdaq up 3.5, and S&P up 0.31. So you really have a virtually flat market. Volume has dried out. Look at the volume here on the spiders. Look at this one candle right here. You can barely see it. It's so small. When there's light volume, also the markets have a tendency to float up a little. I think you're seeing that here. Tried to break down. There's no volume to break it down here, so it bounces off this 94.50 level again and just slowly floats up. Now, if we do end up breaking this line right here, this 94.40 to 94.50 level, that could actually signal a pretty good decline later in the afternoon, especially if we get a little volume to come back in this market. If there's not a lot of volume, then it's going to be a very tough breakdown to happen. But if you do start to get some volume and you're able to take out and close below the 94.40, 94.50 area, that could be a very, very nice breakdown in the works this afternoon in the markets. If it doesn't break this today, we stay in this range, it's all off the table. Then you could easily go back and take out the highs in the coming days. We'll have to really analyze it. It's going to be all about these two lines. Again, as I said, 94.40, 94.50, all the way up to 95.25. This range right here, look at it. Choppiness, up, down, test it, up, test the highs, test the lows, close in the middle, test the lows, test the highs, test the lows again, and we'll see if we test it again here in the early afternoon. But that's exactly what's going on here. It's purely a channel right now in the market, very, very tight. And again, I mentioned the closeness, the virtually the 50 moving average and the 20 are dead on. I almost never have seen that for such an extended amount of time. You're talking about for the last half hour, they've been dead on, basically, the 20 and the 50. I mean, yes, you see a necktie where they cross here and there, but virtually, for half an hour to an hour time, that's very, very rare. And that just, again, tells you that the markets are in a very tight range ever since yesterday when we broke up into this 10:30 time frame. All right. Again, watch the volume this afternoon. Watch commodities. Watch the dollar more than anything, and then commodities off of that. We'll see if we see any sort of break up in the dollar, which could yield a breakdown in oil and some other commodities to cause a sell-off. Overall, again, the markets are virtually unchanged, slightly to the positive side right now, but not by much, folks. Not by much at all. All right, that's all for now, guys. Just an encouragement. If you really want to delve into some hardcore technical analysis, some great guidance, some watch list. We have the Pro Trader watch list, obviously, posting what our pro traders are watching and currently trading and vice versa. That's all included in the research center among with hidden gems. I just put out a new hidden gems report. The last one, I put out 2 stocks in the hidden gems last month, gained 100% in less than a week, each of them. Unbelievable. Put out this month just on Monday for June. Also, Technical Tactic is always up there. Daily Market Report, daily analysis videos, which are 30 to 40-minute videos nightly of hardcore technicals and understanding the markets from all levels, psychology, even a little fundamentals thrown in there. Truly fascinating. All in all, guys, also the webinar this Saturday. You can go sign up at inthemoneystocks.com for our webinar. You can get in on that still. We have a couple spaces left. I encourage you to join up fast. Take care.